one of the biggest obstacles in business is managing your expenses, growing, funding that growth, and remaining solvent while you do it as an SME. A lot of businesses that I see end up having some type of cash flow issue, and then they need to get into a position where they need to manage that, bounce out, and thrive. So today I've invited Alan Ma, who's partner at DVT McLeods, someone who's really, really experienced in this space, to give us some insights into best practice. Alan, great to have you.
Thank you, Peter, and thank you for the opportunity and the invitation.
No, absolutely. Look, this is a conversation that a lot of people will run away from, but I think we need to lean into it and really see this as an opportunity to become better. If you are having an issue with your creditors, with tax, falling behind on tax or any other liabilities, what I want today is to communicate to people that there is a path forward, and working with the right professional or the right professional team will help take you there. One of the areas that I've been reading up a lot on and having questions around small business restructures, SBRs.
Yes.
Is that the right terminology? And can you tell us a little bit about them?
Yeah, so small business restructuring, or just use the acronym SBR to make it easier. It's a new regime that was brought out by ASIC. So it was born out of COVID. Government initiated through ASIC, and government supported through one of the major creditors being ATO, for example.
Yeah.
It's designed to provide businesses with an opportunity to put a restructuring plan, a compromise settlement to their creditors. So the government recognized that COVID was unprecedented times, and no one could have prepared anyone for that sort of scenario. And there's a lot of good viable business in Australia. And now that COVID's over, there's a lot of good business with a legacy of these debts.
Right. So for an SBR scheme to occur, and we'll get into sort of the mechanics of how they work, but does it have to be a COVID era related liability, or it was just put into place then, but now it's kind of like an ongoing program?
It doesn't have to be related to COVID.
Yep.
COVID was just the impetus that brought it into existence.
And SBRs only between companies and the ATO, or can you do an SBR with other creditors that you owe money?
So SBR is between companies and its creditors.
Got ya. So it doesn't necessarily have to be one type of creditor. No. It can be all types.
Yes.
And explain to us kind of the average use case and how it is managed.
So for you to consider SBR, firstly, there are eligibility criteria. Total debts must be less than $1 million.
Yeah.
Employee entitlements must be up to date. Super lodgements must be brought up to date and paid as well. And ATO lodgements must be brought up to date.
Got ya.
And the last key element is you can only do one SBR appointment every 7 years, in the sense of the last 7 years, you haven't done another SBR or simplified liquidation. So once you meet all those eligibility, then you can put forward an SBR.
So if you've done all these things correctly, you're running a legitimate business, you're trying your best, but for some reason you've lost an account, you've had a bad streak in business, and you find yourself owing money to creditors, how does that then work? Do you go into liquidation? Is it something that happens late or something that happens early? Where does this fit in the process?
It usually fits in the process of early intervention. That's something I've been promoting quite a lot.
Yeah.
Okay. Because most people, or from the clients that I do come across, a very common theme is head in the sand. Or either that, or the other common theme is, it's embarrassing to actually ask for help. And it's a sign of weakness and all that sort of, I guess, it could be cultural. It could be upbringings and all that sort of thing. But also, like for men, for example, men you have to be strong. If you're not strong, you got to show that you're strong.
You don't want to go and talk to your friends or your family about your tax problems, right?
Correct. But the way I look at it is I have a very different view, and view that I strongly believe in. It's not a sign of weakness. Yep. It's not a sign of deficiency. If anything, it takes a lot of strength and courage to actually ask for help when you actually need help. And the opposite of that is if I see that if you had an opportunity to ask for help, you elected not to do so for whatever reason it may hold, and you ultimately fail, I think that's actually more embarrassing.
100%. And more costly, right?
Because you could have dealt with a problem when it's sort of, I guess, a bit more palatable in terms of dealing with it. But at the same time, if you look at the context, you look at COVID. Prior to COVID, you look at the major banks. They're very hard and fast. If you owe us money, pay up, or we'll bankrupt you if it's an individual, or wind up your company. There was never something in between. There are, but very few and far between. But during COVID, what we could see across the industry, especially from the banks, is they're open-minded to the idea of having a conversation with you.
Because the banks knew that if they moved on everybody, it would no longer be a problem for everyone else. It would be a problem for the banks.
Correct.
Right? So you have this mutual interest in going back and saying, well, you know what, there's a pandemic. I'll let you ride it out, a repayment holiday, but we'll add it onto your loan. I'll increase my loan balances. I'll get that money back, right? Yeah. It seems like with SBRs that the ATO saw it as an opportunity to say, you know what, if this is a legitimate business, if they're doing the right thing, they've paid their entitlements, let's talk, right? Is that kind of how it works?
There is a theme, like from what we can see in our matters, is that, say from the ATO's point of view, I'm not a delegate of the ATO, but it's quite clear that they look at a couple of things. Do you have a good, viable business? If yes, they really want to support you.
Yeah.
And are you good tax citizens? Apart from, yes, we obviously haven't paid your debts, so you're accumulated to a certain degree, but have you been doing the right thing? You're doing the lodgements, you're still doing it on time. And if you hit those two markers for them, they're much more supportive of that regime. And the whole idea is the current mantra is they want to work with you to solve a problem together, because the worst case scenario, it's a worse situation for everyone involved, for all stakeholders, not just the tax and yourself, but also other creditors, and the ripple effect that we see in that. Not just from the business, because there's also a personal side of it. Everyone's a human. You've got families, you've got a roof to put over your head, you've got to put food on the table. There's that part. And then you've got to deal with your creditors, and they don't get paid, and then that keeps going on.
So on SBRs, how do they work practically? If I come to you and I say, you know, I've got this tax liability, I've done everything right, you know, legitimate business, and we're viable, we just need to come out of this hurdle, otherwise it will sink us. Yeah. How does an SBR practically work if I come to you? For SBR to work, you contact insolvency practitioner like myself. Yeah.
But there's a key party in that process. It's actually your accountant.
Got ya.
And they play a very critical role in this whole process. And what it starts, we start off, we have a conversation, try to understand the background, the scenario and all that sort of thing, and see if you firstly meet the eligibility criteria and whether SBR option is the right option for you and your business at this junction.
Got ya.
And if it is, the necessary paperwork is put together. SBR is really to put a restructuring plan to your creditors, and we're there to facilitate that. And from that point of view, it splits into two phases. First phase is the proposal period, where we work with the director or directors and the accountant to formulate a plan. And because SBR, you can have a restructuring plan up to a maximum 3-year period.
Got ya.
And but if the ATO is the major creditor, they're not particularly keen on anything beyond 12 or 18 months at most. The reason being is for whatever plan, there needs to be a corresponding payment plan, so your forecast.
Yeah, got ya.
And with forecasting,
it's hard to forecast more than 12 months, right?
We don't have a crystal ball. Yeah. No one does. You can do your best estimate, but that, at the end of the day, it's an estimate or a guesstimate. That's what it is.
If I come to you with an SBR and we're successful and we're restructuring and we buy more time and we bounce out of it, does it impact personal credit? Like, is it considered a default scenario? Does it impact the business's solvency? And if it impacts the business's solvency, can that impact me personally later because I've been a director of a company that's had an SBR?
Yep. Good questions. On the face value, there's no direct impact on the personal front because the SBR is between the company and your creditors.
Sure.
Unless the debt's owing to the company creditors, there's a personal guarantee.
Got ya.
So the personal guarantee obviously will kick in if there's a default on the primary debt.
Sure.
In terms of the company, yes, there is an impact because an SBR is an insolvency event. So most every company in Australia, there's a status with your ASIC registration, and the default status is registered.
Yeah.
When you do an insolvency, a corporate insolvency, so a liquidation, a voluntary administration, for example, it changes to EXAD, which stands for external administration.
Right.
And that also applies to SBRs.
Does that stay or only while you're
It's only
working it out?
during the period of the SBR appointment. So in the proposal phase and the acceptance phase, it still shows as EXAD. Once your proposal is either accepted or rejected, it reverts back to registered.
Got you. But it'll come up in your history.
It will come up.
So if someone wants to dig for it, they can find it, right?
Nowadays, what we've also noticed is there's a lot of creditors, like major creditors and suppliers out there that actually registered for ASIC alerts.
Oh, right. So they know once a company is...
So if there's a change of status, they'll get an alert, and then that will flow on to please explain.
That's really good. I think that's fair, right? Because if you're owed money, you want to know the people you're doing business with, if there's something going on that you can lodge your claims.
Yeah. But personally, I'm of the view that ASIC and the courts should use a different category instead of EXAD because...
It lumps you in with all the other stuff.
Because it's slightly different to your normal liquidation, your voluntary administration, or those other corporate insolvency appointments. It's a temporary thing, and it's designed really to find a compromise.
Okay. So this is when you've hit the problem point and you need to solve a problem, right? And you're evaluating the range of possibilities. Worst case, liquidation. This is something that's better than that. Let's go to that. But let's fast forward to before you even get that. Prevention is better than cure.
Yes.
Right? So if I'm running a successful business, but I'm finding it challenging for some reason or another, I've got lumpiness, I'm having issues. I just want someone to come and help me run my good business better. Mm-hmm. I've outgrown my suburban accountant, or they're not really interested in other than lodging my GST and my returns.
Yep.
What kind of services can they come to you and ask for and potentially get help other than an SBR?
So we've got 3 divisions within our firm. We've got personal insolvency. I'm a trustee in bankruptcy, so that's my main area of focus. So we don't do Part 9 debt agreements, and which is one of the formal options to avoid bankruptcy. But we do the Part 10, personal insolvency agreement. Obviously, we also do bankruptcy. In addition to that, I also do Part 11 administration, which is insolvency of a deceased estate. And as an officer of the court, I also do court-appointed trustees for sale, where there's disputes between property co-owners. So that's the personal side of things. Corporate, we do SBRs, that's what we're talking about. We do liquidation, both voluntary and creditor base. We do voluntary administrations, receiverships. And then we've got a consulting division, which is actually not insolvency related, but we draw on our insolvency expertise to help. So we do restructuring, we do business valuations.
That's the part I'm interested in, right? Because that's all the stuff that people don't usually do, but if they utilize them, they can build a better business.
Yes.
So you do valuations,
so restructuring. We also do forensic accounting.
Yeah.
Court expert witness. We also do bespoke due diligence, so payroll, pre-lending. It's really customized. So what area of focus. And then with the new anti-money laundering legislation kicking in, we're adding that service to our consulting division as well.
The businesses that do well,
yes,
that you see, and the businesses that don't do well, right? I'm talking about management of the business. So in a particular industry, you can have a restaurant that does so well and a restaurant that does so poorly, but it's not necessarily the food, it's the people running it, right? Yeah. What are the really good entrepreneurs, business owners, directors doing? And those that aren't, where do they fall short?
There's a couple of elements. The first element is most people are very good technicians. They're really good at what they do, be it a designer, a chef, whatever it may be. And then they say, hey, how do I make this better? How do I make a better financial outcome for myself and my family? And the common logical option is to go into business. Now, whilst you might be a good technician, you may not necessarily be a good business operator, which is the management side of things. Because with running a business is very different skill sets. You have to have good business acumen. You have to understand all the additional responsibilities that comes with running and operating a business. It's okay if you don't know that or you are unable to do it. You look at some of the most successful people, entrepreneurs in the world, they'll openly say they are not the best. They're not the best of everything they do.
Yeah.
But they surround themselves with the best people.
That's the key, isn't it?
So what I'm trying to allude to is there are trusted advisors, which I believe are super critical for not just individuals, but also for businesses. It's really important to have a good accountant and a good lawyer in your wings. And I'm of the view a good one is worth their weight in gold, because don't look at it as a pure number, as a costing base. But what they bring to the table, bring to your business, either they are able to save you money, or they can protect you, or they can help grow your business and your portfolio. So I think that's really the key.
I think that's very well said. I think you want an accountant that can help you grow.
Yes.
And you want a lawyer that can help you stay out of trouble and help protect you, right? Your lawyer's kind of like your bodyguard.
Yeah.
And your accountant is kind of like your manager pushing you, and your personal trainer, like, encouraging you to grow more and more.
What I've also noticed recently is through meeting a lot of people, going to a lot of chamber events and networking events, there's a new, they call it fractional CFOs.
That's right.
CEOs. So you might have a small business, and it might not be financially, commercially viable to put someone on a full-time basis. So that's where this has come through as an alternative solution, that they come in and help you on a specific project or a section of it. So I think that's something worth considering. And I recently went to the inaugural Business Exit Summit.
Oh, yeah. And
that summit was designed, how do you maximize your business in terms of the sale point? It was dealing with the Australian boomers, the baby boomers, in the sense that, okay, now you've built up a business. A lot of them was facing one of the biggest challenges is their children are no longer willing to take on their
succession planning.
The succession planning, the legacy and all that sort of thing. So then they say, oh, what do I do now? And one of the biggest key takeaway is you plan your exit the day you start planning your business. There's an exit strategy.
Yeah.
You don't plan for it when you turn 70 or 80. What do I do now?
It's too late.
So by planning your exit strategy as part of your growth strategy, you know where to go. So I think that was a very valuable takeaway for me.
I guess it's hard, right? Because we all start off kind of like with an accountant we know or a solicitor we know, and then we graduate and we grow.
Yes.
But then it's kind of like it's hard to find out who's a good accountant, because they all say the same things if you're not an accountant, right? And it's hard to know who's a good lawyer because they all look the same and talk the same, right? And you rely on personal recommendations. And how do you go about finding these good professionals that are going to take me from here to, a lot of business owners don't know what's better, right? Until they get to that point and they're like, oh, I didn't do budgeting.
Yeah.
Now I'm doing budgeting. No one ever told me to do budgeting. So what's kind of like your hack from your vantage point as to how to find those better professionals as you graduate?
I think, look, there is no hard and fast rule per se, and we don't have a crystal ball because everyone's going to want. At the end of the day, we're all in business.
Yeah,
we all want to take on the appointment, take on the engagement, whatever it may be. I think it's deep down asking yourself first, what are your expectations? What do you want from this trusted advisor? And then having the courage and the strength to actually ask these difficult questions. This is what I want. This is what I need. Are you the right person for this job? And the way I look at it is everyone are professionals. Okay. They're good, bad, and ugly, but everyone is a professional. And to have a long-standing collaborative relationship with these trusted advisors, you need to be able to have these honest, transparent discussions. They're good. They're sometimes very hard questions, but if you can't even have that with them, how can you entrust yourself
That's
and
right.
business with them? And on the flip side, if they are unwilling to be upfront and honest with you, then you get a second opinion.
Yeah, I think the more you alluded to going out networking and always looking. If you build your power base, you build your network of references, you ask for referrals, you tell your accountant or your lawyer what's not working for you. You're not giving me growth advice, you're not giving me this and that. And if you seek that, then you can go out that and find it, right?
Yeah. Look, sometimes you're just chatting with mates.
Yeah.
Or chatting with other people. And look, I'm part of a few other clubs and events and all that sort of thing. And one of them that we do is part of New South Wales Leaders. It's been temporarily put on hold for the time being. But what I took value out of that one is we're all businessmen. So business people in the sense that, okay, we're here to listen to industry experts. But we're also here to provide a platform where you can share ideas and questions. So it's a collaboration. It's sort of a sounding board. Hey, have you encountered this issue? I've encountered this. Can you give me how do you navigate it?
Yeah, of course. Learning from each other.
Yeah. And I think those is having the right people around you and sharing a similar journey, either in the same path or someone that's already been there. And there's a lot of gems there. And the good thing about these sort of platforms is most of them, they're actually very generally willing to share and help you.
Definitely. Well, that's how you and I met.
Yes.
And someone's going to watch this and learn from us. And, we're proof in the pudding that this actually works. And if you want to be better in business, if we started off talking about problems because we want people that are in immediate problems to get out, but we're ending on kind of if you're, fix your problems, solve your problems, not into problems yet, how you can kind of go from problem situations to strength. Last question I want to ask you in terms of valuations.
Yeah.
I know most people will go and do a business valuation when there's a need to,
yes,
right? When you need to sell, there's a dispute, so on and so forth. Can I actually come and get my business valued if I don't need to, but I want to actually know and use that to help me get better, for example?
You can. And the key aspect of it is, I think, treat it as like a health check.
Yeah.
Like, how am I doing? How am I tracking? And it's not tracking just yourself, but how do I track compared with my competitors?
Peers. Competitors. Yeah.
And it could be, and then because of our experience in terms of consulting and insolvency, because insolvency, we're really, how do you say it? I've said this in a different scenario. I'm of the view we're undertakers of financial failures. So we're there to mop up the mess, put it back together, find out what went wrong and how it went wrong. And because we're good at what we do in terms of insolvency, we understand what the indicators of insolvency. And we use that skill set as early intervention, as consulting in terms of restructuring and looking at.
When you know what's bad,
yes,
you can help people get better, right?
Indeed. And why I'm saying that is take advantage of our skill sets and our experience.
Yeah.
You might come to us for evaluation, for example, in this scenario, but we've got other avenues that we can add value to the exercise. And it's something that you may not have considered.
That's really interesting.
At the initial point of, I just want evaluation. It doesn't want to do a health check. But you know what? And then we look at it and say, we can probably say, hey, if you're willing to consider, have a look at this.
Yeah, that's excellent.
Explore these sort of avenues. And the thing is, at the end of the day, look, for us, it's pick up the phone, have a coffee, let's have a conversation. You might start off with one purpose or one intention, but it may ultimately end up somewhere else because we can rely on our wealth of experience and across all the different types of appointment we do, there's things that we know, we can see that you may not even consider.
Yeah. Awesome. Well, thank you so much.
Thank you.
Great insights. I think you touched on, some things that are difficult for people, but even if there's a few people that see this and it helps them avoid that worst case scenario and it helps them bounce back and get better, I think that's really, really fulfilling, and that's, a really, really great work that you guys do. So thank you very much, and we look forward to having more conversations together.
Definitely. Thank you. Appreciate it.
Thank you.